This is the Texas Land Guys podcast, hosted by brothers Tim Dosch and Tom Dosch. With their partners David Marshall and Trip Rich, they have built DMRE, the leading land brokerage in Texas. With decades of experience brokering deals between landowners and real estate developers, they take you inside the deals that move the market.
All right, welcome to the podcast. I've got a guest with me here today, Trey McGhin, here in our Dallas office. Trey, how are we doing?
Doing well. Excited to be here. Thanks for having me on.
Good. Well, we'll do another episode where we'll delve into who Trey is, but I'll just say as we intro this episode, Trey runs the DFW office here with me. And so we sit together every day, get to spend a lot of time together leading the office. We've been working together now since 2019.
Yeah.
In the beginning, it was virtually. And then since 2021, when I moved up here, we've been together, which has been a lot of fun. So we thought for everyone, today would be a good time to talk about activity in Q1 of this year, 2025, what we've seen, maybe how that compares to some of the predictions that we talked about a few months ago when we did the episode with the other offices, with Houston and with Austin. We don't have any headphones on today, which is kind of fun because Trey and I are both here together in Dallas. And so we're getting to do this a little bit differently than we normally do. But I'll say that we're recording just a few weeks before the end of March. And so we have what I would say is a pretty complete picture of Q1, but we'll still have a couple weeks here of data that we'll get to see come through. So everything we talk about will kind of be, first 60 to 75 days of the year and what we've seen. And this episode will launch probably beginning of April, but recording it just a few weeks earlier. So I think a good place to start is probably really just the numbers, what we've seen from an activity standpoint. And so Trey, I'm going to ask you to kind of provide an overview. When we think about activity, a lot of it's going to be offers and it's going to be deal activity. So What have we seen on the numbers side to start 2025 here and specifically here in DFW?
Yeah. And always excited to talk about deals, right?
That's right.
So I think the biggest comment I would make just to start is that 2025 has really been off to a strong start here across Texas, but specifically in our Dallas office. We've gotten off to a hot start. I think it's going to end up being our best first quarter ever, which is incredible, coming off of 2 years of being in a challenging market. And I think a lot of the buzz in the air kind of started, after the election. We were already kind of seeing some signs of people starting to get more aggressive. But to start here in Q1 of 2025, mid-March, we've already signed up over 30 new deals as a team, which is really exciting. And one of the big things I think that has come out of that is multifamily is really coming back strong.
Mm-hmm.
Multifamily is always a huge staple of our business, just in terms of land transactions. But of those 30 deals, I think it was 17 of them are multifamily deals. And so we've had several listings that we've taken out to market in Q1 that are entitled multifamily sites. And candidly, we're just selling them all.
Yeah.
It's kind of been one of those things where there's starting to be a little bit of frenzy again, and in that we can't really get good sites fast enough. And so that's been exciting. Again, just having signed up over 30 deals as a team is really special. But and with that, I mean, we've made over 150 offers in the market. I think we'll probably end the quarter at 200 offers sent out. It's probably where we're going to land as a team, which is great. And I think one of the things that is really interesting, so that's obviously the front end of the pipeline, right? Looking at what's going on your contract, what type of deals those are. What's really interesting is just the closings that we've had. This year already, we've closed 3 deals into construction on the multifamily side. So 3 of our 4 multifamily closings have been with construction loan, ready to break ground, which I think we maybe closed 3 or 4 of those all last year. I mean, we closed a lot of multifamily deals, but they weren't full capital stack ready to go. And so you're definitely seeing a lot more ability for groups to get the full capital stack together and get going on construction, which is really exciting. That's kind of one of the big pieces of our business, right? And so excited to see that. And then I'd be curious what your thoughts are. I don't know that we're surprised by the activity. I think you and I both expected to get off to a hot start this year, but so I wouldn't say it's just been a surprise, but curious what your thoughts are on just what we've seen so far.
Yeah, it's interesting because I don't think we were surprised. did the episode a couple months ago on predictions, and we talked about, we really as a company believe that we're at the beginning of a new cycle. And actually, I had a client ask me that yesterday. They asked me, when do you think we're going to have a cycle again where deals make sense? And I was like, we think we're there now.
Yeah.
In addition to what you shared, just on the multifamily side in DFW, I think we're flirting with 50 deals under contract. We're getting close to that number, which is incredible to think about. We're starting to get back to these kind of numbers. And I guess we're actually probably there, because overall, I think we've got about 100 deals in the pipeline,
right,
which is where we were at the end of 21 when the market was just on fire.
Yep.
So I think it's interesting that depending on who you talk to, a lot of people are surprised when they hear that we're experiencing this kind of activity. But to hit close to 200 offers in the first quarter is really strong for us as a team. And then just the amount of deal activity. And to your point, on the equity and debt side, I was talking to another client yesterday that mentioned that they're going out for a construction loan on a project, and they're like, we are very confident. We have several banks that want to lend us money on this deal. And we haven't been hearing that for a while.
Right.
So that's really exciting. I mean, it has gotten easier, but to hear that, like the type of terms we're hearing, the leverage, and then just the number of banks that are interested, that's pretty exciting for us.
Yeah. And it's been exciting too, just taking a step back, not just in multifamily, but we always talk about like our three main product types that we focus on are multifamily, industrial, and single family. And it's really been all three product types have been strong to start the year. We've had some massive single family deals get signed up, just some really great activity happening kind of across the market, which is exciting to see. But yeah, I mean, just from the capital side of it, you're seeing a lot more of the institutions get back in the game. We're hearing from a lot of clients that Carlisle is really pressing to get money out, which that's great for our business. Obviously, they close a lot of multifamily transactions as the equity. And so exciting to see those things happen. The other side of it too is just, looking at activity kind of more holistically, of everyone seeing the end of the big supply wave of construction that we've experienced the last couple of years. And so construction's finally starting to slow down. And so you've seen with that, construction costs are starting or have come down. I wouldn't say starting to, they have. We've had a number of clients have deals that ended up penciling because construction costs came down while they were under contract. We were talking to a group 2 days ago that said while they were under contract, they got $5 million in savings on a suburban garden deal. So like all of those things are leaning into what we're talking about when saying, hey, the market's really picked back up. One of the sites that we marketed over the last couple months, a suburban garden deal, that one, the group who ended up winning it 4 months ago when we first started talking about the site is like, hey, this one's going to be coming to market after the first of the year. They were not competitive on price. They couldn't make it underwrite. And then they ended up winning the deal. And they had about 20%, 25% pricing movement in where they were from 4 months ago. And a lot of that was just in construction savings. Obviously their capital being a little bit more bullish, but and rents in that area ticked up just a little bit, but it all kind of came together. And so we've seen a lot of examples of that, which is really exciting.
Yeah, those are great examples. What do you think from a sentiment, I guess, on the developer side? I mean, you mentioned that we're seeing activity across the use types, but maybe we take it a use type at a time, because that's probably the easiest way to talk about it. But from a sentiment standpoint, I guess I could start for multifamily. There is a little bit of inconsistency depending on who you talk to.
For sure.
I think we're in meetings where we're hearing that groups are really aggressive, and I know we said a couple months ago when we did our predictions podcast that we had just met with several developers that said we want 3 to 5 new deals, new starts this year. A lot of those developers are still saying that, but they're having a hard time making the deals pencil.
Right.
You also have a lot of developers on the multifamily front that they're just really struggling in general to maybe either get a project out of the ground or make numbers work on any single project. But then there's developers like the one you mentioned from a few days ago that we just closed a deal with them. We signed up a couple more deals with them. They've got capital, their numbers are in line, and I really do believe they're going to go out and do 5 to 7 deals in the next 12 months. Right. And so it's interesting that depending on who we're talking to, you're seeing some companies downsize, pull out of Texas, and then you're seeing companies hire developers that are working at other Texas companies and start a presence out here.
Yeah, it's really interesting. There's definitely been, even coming into the close of 24, there were a few development companies that were kind of holding on with their last few guys that made the decision to finally pull the plug. But, we track, it's like over 400 multifamily developers that say they want to do something in Dallas. And the reality is there's probably 20 to 25 of them that are actually like getting stuff done consistently. And now there's always the one-off deal here or there, but we marketed a deal in October in Grand Prairie, and we went pretty selective on that. We only went to 35 groups. The owner said, only bring me buyers who can close on this deal. So we went pretty narrow, and like 75% of the groups offered. And so when you have the right site in the right area, you're definitely seeing people get aggressive again. And the other thing is that we've seen timing condense. So, the group that you mentioned from a couple of days ago, like we just put a deal under contract with them. That's a 5-month transaction. We had one in Frisco late last year with Rosewood. That was a 5-month transaction. And so you're starting to see a little bit of that timing condense again. Whereas, the last 18 to 24 months, most groups would tell you, I have to have a year, otherwise I can't get this deal closed. So that timing condensing, and then also just more groups getting into the market with offers, and we're starting to see pricing nudge up again in certain opportunities.
Yeah, I was going to say on the pricing front, something we talked about, predicting that we were going to start to see higher pricing again. We just made some offers in the last few weeks for wrap and podium sites again. And so I know a lot of times we've been talking about suburban garden, and that's because 80 to 90% of the activity has been suburban garden sites. And our goal is always, we want to go where our clients want us to go to find opportunities. So I would say that it's probably 95% of clients the last 3 years have been saying, bring me a really well-located 3 or 4 story surface park site. So that's what we've been doing. But now we're starting to have more and more clients say that they are willing to come back in or build in a market like a Plano or a Frisco or an Irving that's, not in town Dallas, but a very urban market where you're going to have to go up. You're going to have to do minimum 4-story wrap, if not podium. And some of the pricing of these offers has been really, really incredible. I mean, we made a couple offers around $40,000 a unit for wrap sites, which we haven't seen that for a while. And I think it's pretty exciting that there's groups out there, and these are not, offers can be phantom offers. They can be not real, but we're talking about groups that when they're making the offer, they actually can write the check. Like these are real buyers.
Very real.
And so I think you made a comment earlier about our biggest struggle is not finding buyers, it's finding sites right now. And we're back to that point in the market where we've put, like you said, 17 deals, new multifamily deals together this year already, but we have demand for a whole lot more than that. And so we're working on a lot more. I think Q2 will be a huge quarter from a deal standpoint, but we're selling our listings really as fast as we can, if the numbers are even close to making sense. And then on the representing the buyer side, I mean, we're getting offers out very quickly right now. And so we're having to be really selective with who we work with because to your point, about 5% of the market is probably really capable just because there's still some headwinds with rents, but that 5% of the market is being really aggressive.
And I think you hit the nail on the head. Like the biggest shift that we have seen this year is that jump back into building, chasing and trying to go buy more wrap and podium type sites. I think that's been the biggest surprise even just in my mind, I'm thinking about in the last week, some of the podium and wrap offers we've made that, again, 2 years ago, people would have been like, yeah, I can't do that right now. So that's really exciting. And I definitely expect that to continue, especially as we've seen construction pricing be in a good spot. Obviously, there's a little bit of the knee-jerk reaction right now with concern over all the tariff talk and everything like that. And I think the groups who are actually getting stuff done believe that, by the time, it's to the point where they've got to go pull a construction loan and actually be, purchasing materials and things like that. A lot of this stuff's going to be blown over at that point. So you're still seeing groups kind of march ahead.
Yeah. How about industrial? Let's move to that. Why don't you take that one first? Just kind of sentiment, what we're seeing in Q1.
Yeah. So industrial, similar to multifamily, capital has came came back in a strong way. And I think one of the big things there is, it's not uncommon. Like both of those product types, a lot of times are using similar capital sources. Like we mentioned Carlisle earlier, they're obviously deploying capital for both product types. And so that's not too dissimilar in that as that capital's crept back in, we've seen those guys get more and more bullish. And so I think the biggest shift on the industrial side from last year to this year was, last year, everyone was really focused on the more infill, like 10, 20, if you could find 30 acres, but really like those sort of up the fairway, somewhat smaller industrial sites where they could do a little bit nicer products. They were in a more infill type market. And that demand is still very much there. But the thing that has shifted back on is that the million square footers, the big warehouse products, the huge distribution centers, those are getting absorbed. And there's not that many of them left out for lease right now. And so I would say the biggest surprise on the industrial side would just be the number of clients who've told us they want to go tie up a larger site to try and close for $500,000 to $1 million square feet for industrial product. And so I think as we move into the second quarter, I definitely think we're going to start hearing about some groups getting control of sites to go do $1 million square footer, which again, that's something that those have been built out over the last 2 years. They've been in lease up. There's obviously areas of DFW where it felt like for a while you couldn't give 1 million square feet away, but you're starting to see some absorption in those and groups even looking back to go into those areas again, which is really exciting.
Yeah, that is exciting. And I think we talked about it again when we did the predictions that we're seeing activity further out, like you said. It's interesting, some of the markets that it's almost like there's been a land rush on industrial land in some of these outlying markets where we're fortunate that we really had them covered and we were spending a lot of time researching them when a lot of developers were saying, oh, we can't go that far out yet. It doesn't make sense. And then it's almost like there's just been a switch that's been flipped the last maybe 30 days where just developers are starting to get really aggressive on sites we've known about that have been out there. We're putting some pretty big deals under contract further out.
Right.
And then I think you mentioned the other day, there's some properties that we've been all over even further out in areas like Melissa, where no one's really even talked about industrial, where now you have industrial developers looking up in Melissa, which is, and even like a Van Alstyne, which is really interesting because that's just so different from, I have to be within, the core infill part of Dallas. And that's really all it's been probably in 23 and 24.
Yeah. And obviously like you talk about Melissa and the McKinney airport announcement has been huge. There's obviously a lot of activity up there, which is really impactful. Just seeing how many groups are willing to go plant a flag up there. And then even up the I-35 corridor, like willingness to go back up to Denton, places like that really for, again, the last 2 years have just been, keep it in mind, like can't really do that today.
Yeah, it's been fun because for us, obviously, the more land that opens up that we can go look at and put together for industrial, just the more deals that we can do.
Right.
I mean, we got really creative just earlier this year, we closed a real small industrial deal in Grapevine.
Yeah.
Just a couple of acres. It was a site that was kind of so small that normally we would have overlooked it, but with where the market's been, those were the kind of deals that were getting done.
Yeah.
So it's fun to do those really cool, unique infill deals, but getting to work more suburban again on some of the big bomber tracks.
Yep.
I think those are the ones that obviously get pretty excited about.
Yeah, for sure. And I think that's obviously as a development guy, that's what they get excited about too, because those are obviously the major deals that, you think back on your career and talk about, everyone loves doing the 10 to 20 acre site. But I think, those industrial guys really get out of the bed in the morning for chasing a 1 million square footer.
That's right. I always love hearing you do the same work on 100,000 square feet that you do on 1 million. So it may as well be 1 million. Here's kind of a little bit of a debate topic. What do you think if you had to compare multifamily to industrial activity right now? General sentiment of the developer within those asset types. Who do you think's a little bit more bullish?
That's a great question. Man, I don't want to use the cop out and say it's a tie.
Yeah, it's interesting.
I think they're both getting stronger and stronger in the sentiment. I think it just depends on the location. I don't know, maybe I would say overall, multifamily, but in certain pockets, it seems like industrial is getting a lot more aggressive.
Yeah. I think it's hard. I just thought of it now, just kind of the idea of which one of those.
Yeah.
Because I think we would both agree in 2024, we would have said single family for sure is the hottest asset type because of rates.
Right.
And we'll hit single family in a second, so I won't get into that yet. But the fact that you could say that I think both industrial and multifamily are rivaling single family right now.
Yeah.
And that those two could be a tie.
Right.
Only to play devil's advocate, I would say maybe industrial could be.
Mm-hmm.
And it may not be that it's actually more active or there's just, it's more positive generally, but it's that maybe the clients themselves just tend to be a little bit more active on the industrial side.
For sure.
If you looked at the entire pool of developers, because it is interesting with multifamily developers that you have the active ones and then you have the ones that are downsizing and laying people off and kind of pulling out of the market. So it's a very kind of end of the spectrum type situation with multifamily. Yeah. But I think both of them are really benefiting from limited supply, an incredible amount of population and job growth. And since industrial developers had not been looking out in the suburbs now, you mentioned it, areas like Denton and McKinney, Frisco, very difficult to get into for industrial. Plano, it's pretty built out. So where are you going to go? You're going to go to McKinney. Now you have the airport happening. Well, McKinney's going to get built out here pretty soon. So you're going to start looking further north. And so, yeah, it's interesting. But I think what's exciting for us is that it's a debate and it's positive.
Yeah.
It's not a chase to the bottom anymore.
Right.
They're both very active wanting to do deals again.
Yeah, for sure. And there's for both product types, there's submarkets where we're still getting a little bit of like, I can't even begin to make something work there. So there is a little bit of a healthy balance, but I think for the right submarkets, we're seeing both of those product types really get aggressive.
Yeah. On the industrial front, to that point, I'm interested in your take. I know South Fort Worth is probably one of those markets where if you're far enough south, it's been difficult for developers. And there's deals that were purchased that are available, that are entitled, that it's just been hard for other developers to step into those deals because, there's just too much vacancy in some of these markets. Mansfield's similar. We were talking about Mansfield the other day. I think that's a great long-term market, but right now with where vacancy is, there's just not as much activity there.
Yeah, Mansfield's always been a little bit of a head scratcher. It's such a nice market for residential, but and retail obviously, but industrial guys have just not been as excited about it. It's a little bit trickier to navigate, but and you mentioned South Fort Worth. There's still very much a demand to be in South Fort Worth. It's just a question of how far south and
what's the pricing,
how far off the highway you are and things like that. So those are definitely playing an impact, and obviously places like North Fort Worth where it doesn't really matter. Like guys just want to be there if they can find a site. So
I think that South Dallas has been like a 4-letter word for a while.
Yeah.
But I think that's kind of changed.
Yeah. I think like if I was going to make a bold prediction for Q2, Q3, like I think that we actually see a couple things get under contract in South Dallas. Now, I don't think they're going to be the massive 1 million square footers that you're used to seeing down there, but it's slowly starting to trickle back in with a little bit of demand.
Yeah, that's interesting because it really has been meeting after meeting after meeting. Like we'll look anywhere but South Dallas, and then that's started to change too. So and that's just real estate and cycles. And there's areas where they get overbuilt, and then when they're no longer overbuilt, they're in demand again.
Right.
And so let's transition to single family.
Yep.
So I made the comment earlier that single family was really the hottest asset type, has been.
Mm-hmm.
Now I think you could argue that it's really hot still, but it's not necessarily way out ahead of multifamily and industrial.
For sure. It's really interesting. I think, when we look at our office and talk to guys that focus on single family every day and talk to Ryan, it's really the push and you and I've seen it. We're working on some of those deals as well, is like the push to have more of the infill type product. And when I say infill, it's, it's coming into sort of the tier 1 suburbs that have been built out for a long time. And maybe there's, a looked over 10 acre site or a redevelopment play or something of that nature where groups can come in and do a little bit more, whether it's 50-foot product or they're building townhomes, et cetera. I think in a lot of those cases, we're seeing record pricing. I think there's been a couple deals we've talked about around the office that the pricing being quoted is higher than we've ever seen anything close in that area. And people are still going and making those offers and getting them signed up. And so I would say that's been one thing that's been really incredible over the last couple of years, is just when we talk about pricing, how much pricing has ran up on the single family side. Even to the point where now there's been some cases where we're almost scratching our head of like, should this be a multifamily site or should it be a single family site? Like there's been some examples where the pricing's that close, which historically has never really happened. So that's really interesting. I think on single family, those infill type plays are still really strong. Finished lots are in such high demand. Everyone's still competing for finished lots as much as they can get their hands on. You have a lot more companies that are out chasing the big mud plays and the longer term, like massive acreage, master plan communities. But the other thing that's a little bit of a caveat there is just the public builders. You know, they're doing everything they can to keep land off their balance sheet. All of them being publicly traded. They're I think the joke I've heard a couple times is that they're allergic to land right now. And so I think, as much as you're seeing the high demand on certain sites for single family, you're also seeing examples where a public builder can't take down a site because corporate doesn't want them to keep it on their balance sheet. So what are they doing? They're bringing in a land banker, or they're really pressing the owner, like it's got to get to finished lots, or they're dropping the site altogether. Like there's examples of all three of those things happening. And really what that boils down to is now when there's a finished lot opportunity in a market that really works, they're getting super aggressive for those opportunities.
Yeah, that was a great overview of what we're seeing on single family. And probably all that I would add to that is in Q1, what's been interesting is we've seen really, really good activity, like you said, on infill sites. So a lot of urban, townhome, high density, Lake Highlands, 3 acres, or 15 acres in McKinney, and you're doing high density product. But then on the other side of that, we've made more offers than we've ever made. And this goes beyond Dallas. It goes to the other offices too. But for master plan,
right,
large acreage, I'm talking anywhere from 500 to 3,000 acres for these big master plan communities. And I think we talk about this a lot. If you're looking to invest in real estate anywhere across the country, how is the Texas Triangle not at the top of your list? And then how is DFW not at the top of your list? I mean, we have so much land here. We have such an incredible population base and job base, and the ability for us to grow as a city. We've done such a good job planning out these employment nodes further and further outside of town. So you go up the tollway and you have, first class, almost like world-class developments going in Frisco up at 380 now. They're going to employ tons of people.
Right.
So now it allows you to go live up in Gunner and have a 30-minute commute to work. And so it's really opened up these suburbs. So some of these offers that we've made, probably not some of them, I would say the lowest are around like 50 million, up to north of 100 million, single land takedowns, big master plan developers, very bullish on, we want to come in, we want to plant the flag all around DFW. People ask me, where's DFW growing? It's growing in every direction. It's just maybe growing faster north.
Right.
But there's opportunity really everywhere. So that's going to be really interesting. We have several big kind of 1,000-acre plus master plan community sites we've put under contract that are part of those 30 deals.
Yeah.
We have several that we're really close on.
Right.
I think Q2 is going to be really interesting just to see how many of those materialize across the markets, because they're really interesting sites, really unique sites. A lot of them are pretty teed up, so they're quicker transactions, which normally you can't say 3,000 acres development, quick transaction in the same sentence, because
I know
it's not. So that's going to be, I think, fun to see. But it's the dichotomy of urban, couple acres, all the way up to a couple thousand acres.
Right.
And we're doing a lot in between too, but it seems like there's really strong demand right now on those two ends of the spectrum.
Yeah, I think to your point, like in the last 6 months, probably, I bet we've made more $50 to $100 million offers than we ever have over that kind of a time period. And the amazing thing that you hit on is I'm sure there's examples, but a lot of them are fast transactions, which is really kind of the astonishing thing, because it's not uncommon that we are working on 1,000-acre plus sites across DFW, but or across Texas for that matter. But it's really incredible just to see some of the timelines on some of these offers and in how bullish some of these groups are getting to start working on a master plan again.
Yeah, I think prior to some of these bigger, quicker master plan offers, all those big offers were data center sites, that were all,
right.
And we continue to make those, and those tend to be, how many figures is that? 9 figures? Is that what that is?
I don't know.
It's a lot of big, a lot of zeros. Those tend to be big deals, but they take a long time, and unless the site is completely teed up, which they rarely are, because then they're already under control. But that's going to be fun to see what happens.
Yeah, it really is. And I think the one other thing I'd just say on single family that's been a big topic as of late is home sales have been a little flat or down in January and February. And I think the question remains, is that seasonality, or is that a sign of something bigger happening in the market, which we'll probably learn here over the next couple months. I would say it's probably somewhere in between. And you definitely have some seasonality that plays into that, especially, I think historically January is always a really slow month for those new home communities. But, and then, you hit it, like data centers, as we continue to pursue those. Those are always pretty fun offers to make, because those are the sort of like the whale hunting type deals that you're pursuing.
So a couple deals to mention that we've closed in the first quarter. Yeah. Just to kind of highlight some deals that have happened. So we closed a deal just recently with Mill Creek up in McKinney. And that's neat, because I think that was our final of 3 phases of commercial land. We closed 2 phases with Mill Creek. This was the second for apartments. And then the other one was a build to rent site and a master plan community up in McKinney. So it's pretty neat to see that get done. That was one of the deals that you mentioned that closed into construction.
Right. Yeah, it was great to work with the family and the sellers on that over, I was thinking about that yesterday as we started having conversations with them, back 2020, early 2021. So that's definitely been a long time coming to close through those 3 transactions for sure.
Yeah, that's weathered a lot of changes in the market, but exciting to see when you get to work on those multi-phase projects. That's pretty cool. And just to see that get built out, beautiful property. So that was a fun one. And then we closed a deal shortly before that with JPI out in Denton. Really, really neat property that a client of ours purchased as an investment, and then gave JPI time to go rezone it. And so we ran a marketing process on that last year, had a best and final, really competitive, lots of offers. That was a really unique property because it was 26 acres. Yeah. And there's a lot of different ways you could cut it up. In Denton, with the way their future land use works, it allows for a lot of different things. Right. And I remember we had really the offers were coming in from apartment developers, and they were coming in from more like build to rent developers. Yep. And the seller ended up selecting JPI, and they had a really unique plan, because they basically took half the site and decided they would dedicate it as a park. Right. And then the other half the site, they designed 4-story multifamily, which was in line with the future land use. But you would normally think, how would you get the neighbors on board with that type of use? So it's pretty neat. They did a great job of designing the park, the multifamily. It's a really nice looking project that'll get built there. And the way the topography was on the site, it's going to be a great development for the community that's right around it too. So it's fun when the rezones get done, because we both had a lot of heartache on rezones over the years. So when those get done, that's a lot of fun.
Yeah, for sure. Obviously, we closed a deal with Freestone up in Anna for multifamily in the ETJ, which was really exciting. That one, again, a deal they're breaking ground on pretty much within 30 days of closing. So exciting to see some of those deals come back into the market. And then likewise, Ryan closed a big mud deal out in Princeton, and then closed another big master plan community down in Alvarado. And so, just a lot of larger transactions taking place. I think even we had the investor deal that closed about 45, 50 days with, an investor who had 1031 money. So it's been really fun start to the year for sure.
Yeah, there's been a lot of activity. Signed up a couple really fast deals that are going to be closing here next month that we're excited about. And then you and Ryan had a portfolio of listings for a very large developer investor based out of Florida that we marketed several single family and multifamily sites for. Yeah. And to your point earlier about just how quickly we're selling inventory, marketed those sites. I think it probably took longer to get the materials finished on those than it did to get the offers in and get really aggressive buyers signed up. And so excited about those single family and multifamily sales that we'll have for that client later this year.
For sure.
And I think for us, it's pretty exciting because we've got some bandwidth right now to work on some new listings. So we're looking at signing up some new listings that we're pretty excited about that we'll be taking out.
Yeah.
Some urban listings. And we believe the urban market will continue to come back.
Yep.
So this will be a good time to be working on those. So maybe looking into Q2, I know we're going to be looking to sign up some new listings. We're going to be working on those. What are you expecting to see next couple months before we get into the summer months?
Yeah, I expect the market's going to continue to be bullish the next couple months. I think that we're in a spot right now where things continue to be strong. There's a lot of people who are looking at their pipeline just because things have been so hard the last couple of years that those guys are really trying to get deals going, right? You're seeing it really on both industrial and multifamily. So I think we're going to continue to see both of those use types be aggressive over the next couple months. I definitely, as usual, like things typically slow down a little bit in the summer with people taking vacation and things of that nature. But I think we're going to continue to have a lot of demand. I think going back to your pricing prediction from Q1, I think we're going to continue to be surprised on some of those offers. Like we talked about making wrap offers at 40 plus a door. I think we're going to continue to see some of that. And ultimately, I think it'll be interesting because at a certain point, a lot of these entitled sites that have been floating around for the last 2 years, they're all going to get spoken for in some capacity. And so it's gonna shift back to groups looking at a lot of creative type ways of getting deals done and starting to work on rezones again. And so I think all that's going to be really interesting.
Yeah, I agree. And I would add on, I think you just hit something really important, that the groups that have been probably like the middle of the bell curve, like they all want deals, but they're still struggling to get to the price. I think that we're going to see things get even more active in Q2 because they're not going to want to be in Q3 and not have deals under contract,
right,
and not have a pipeline.
Yeah.
And so I think that they're going to recognize that, yes, we have the tariff situation going on, but construction pricing has come down. Rents are going to come back because of where supply is. And so it's time to get more aggressive. And we've seen it again and again in our career. It's funny. We look back on those COVID days and we look at lists that we had of available sites that we were pushing.
Yeah.
And we'll look back at a list of 20 sites and they all got done.
Right.
And at the time, people were passing on them. They didn't work, this or that reason.
Yep.
At the end of the day, it's so hard to go get product on the ground. Like right now, if you aren't willing to go buy something that's entitled and you're going to go entitle a site, you may not be breaking ground for 2 years pretty easily. You're going to miss this window that exists of lower construction pricing and lower supply.
Right.
And so I think what you're going to see is a lot of these developers say, okay, we've got to step up 10, 20, 30% from where we were.
Yep.
And we just saw that the other day with our listing. Like you said, 4 months ago, they were 25% less. And in 4 months, they not only saw construction pricing come down, but they have more motivation now that this is the time to go get the pipeline. And I think the developers that are early are going to be rewarded because you're going to take one of two stances. It's either going to be it's time now, or there's going to be developers that are, we're headed into a recession. It's going to be tough. I think 2025 is just going to be another really tough year. And there's definitely going to be developers doing that. And then there's going to be developers like the ones we've been working with that they're closing deal, they're breaking ground. Some of the per square foot costs we're hearing for construction are blowing my mind how low they are.
Yeah.
The groups that are out doing deals are seeing when they're going and actually putting a shovel in the ground.
Right.
These are not fake numbers. Like these are real costs.
Yeah. It's amazing how much construction costs have dropped when you talk to groups who are actually out building it rather than the groups who are just getting kind of a quarterly update from a construction company about what costs look like. The groups who are getting shovels in the ground right now are really seeing the benefit, which is awesome. I think the other thing we'll probably see, as you and I are having very live conversations about this, is there's a number of deals that developers own that they're finally kind of coming to the end of the rope on. Like, I just can't hang on anymore. Like, finally starting to say, hey, I'm gonna take a big discount on this, but I need a transaction by like the summer. So we're starting to see a few more of those pop up It seems like every week, which is really interesting because I do think, obviously, given those discounts, like those deals are going to get done.
Yeah, I agree. That's a great point. And it's a great plug, I think, just for us. We're selling a lot of those sites for developers. And in some cases, the developers that hired us last year to sell their sites, we've actually, because we've been able to give buyers time, they've ended up making money on the basis. And so, for our audience that owns land, that whether you're a developer or not, let us, contact us, let us put together a thought process, kind of a package on what we think it's worth and our strategy to sell it, because there's a lot of demand right now.
Yeah.
I just think sometimes you got to be careful that the only information you're listening to isn't just the information that maybe is in your head. And there's certain developers that's where they are. I think the benefit we have is we're not sitting up here and we've only talked to a few people. Like, this is talking to hundreds of developers to start the year.
Yeah.
And for sure, there's very pessimistic developers, and then there's a lot of really optimistic ones. But then there's also just the fact that we're closing deals.
Yeah.
And so that's been probably the biggest highlight of Q1 is we had a pipeline where we felt like it was going to be a strong start to the year. And we both know we've had pipelines disintegrate before, but the fact that we have these deals closing has been a great confirmation.
Yeah, for sure. I think there's a lot to be optimistic about, especially sitting in Dallas, Fort Worth. There's so many people moving here, so many job announcements. It seems like every month another 1,000 employees is moving from some company in some other part of the country, which just continues to fuel the demand. So all that's really exciting. There's a lot to be thankful for. And I'm excited for our team just as we look at this year. I think we're going to have a really strong year and expect that things are going to continue off of what we saw for the start of the quarter.
Well, Trey, thanks for joining today. It was fun to get to do this. No headphones in the office together, talking about Q1. Looking forward to having you back on here soon to talk about just your history at DMRE.
Yeah. Thanks, man.
Thank you for listening to our podcast today. If you have questions about land you own in Texas, send us an email at texaslandguys@dmre.com and follow us on LinkedIn to stay updated.